All right, I guess this means we're online now. Welcome to LinkedIn Live. On this particular afternoon, we're going to spend some time talking about venture capitals with the VCs strike back finally. We're going to ask what this is about. The VCs striking back finally. Have they even left? But we're very pleased to welcome, of course, the host of today. That's me. I'm going to be the moderator. I'm kidding. I'm Karina, Soerja, and it's a complete honor to be invited by Martyn Terpilowski to be here today. Thank you so much as the CEO of Bhumi, Varta Technology Indonesia.
Thank you for joining us.
Yes. And here, all the way from Vietnam, is David Yee, who is the managing partner of Ethos Fund. And I had the chance to talk with these two gentlemen just before we went online, and it's been a rodeo drive. Let me tell you, it's been a rodeo ride, and I'm loving it. And I think it's very, very important to really introduce both of you first, right? Martyn, David actually wanted to be introduced in a certain way. So he is obviously the managing partner of Ethos Fund from Vietnam, but he also says he's a VC who hates most VCs on the way to becoming the most famous Korean American in Vietnam. So welcome, David, to Jakarta. We're live from Jakarta. Martyn, are we ready? Is this some kind of VS showdown? It's red versus blue, purple pillow versus blue pillow. There you go.
I don't know why I was sat on the floor, but that was not my idea. I'm not a general sitter on the floor, but I'll play along with you guys, as you're younger than me, so let's go.
So how's everybody doing this afternoon? You ready to interact with our viewers?
Absolutely.
Oh, yeah, let's go. Well, I heard you mention earlier that you waited 5 years to have someone speak with you for this podcast like this.
Right, so not actually David here. But yeah, I mean, since I came to Indonesia, yep. I've on many occasions tried to interact with the venture capital guys, and they don't really want to discuss anything with people outside their own little circle. Mm-hmm. That's why you will see that they'll have their Tech in Asia event where it'll just be VCs and people needing money, but there won't be any serious business people there. And at the same point, you just don't meet most of these guys in the rest of the world. It's a two-tier economy. In all the events I go to, in the chambers of commerce, power breakfasts on Friday morning with some of the most powerful people in the country, these guys don't go. They're in their little world where they can tell everyone the stories, and everyone slaps them on the back, and everyone needs their money, and they seem to think they are like celebrities rather than businessmen. Very different to the old world. I used to work in capital markets where these people just are seen and not heard and get on and make a lot of money. Mm. Here it's just like there's a lot of show. But yeah, I've read some of the stuff they write on social media, and it's irritated me. And I've called some of them out on it. And usually all that happens is you get blocked, and they will avoid you, and they will absolutely decide, oh, I don't want to talk to this guy. I've even offered before to put $100,000 in a charity of a gentleman's choice to do a debate, and he still didn't want to get involved. So I think that shows that there must be something to hide, or you would do that. Why don't these masters of business want to enter into conversations with people who don't agree with everything they say? So that's how this came about. And I saw a post from Davey Boy on LinkedIn, and I thought, oh, there's another idiot, but he's not from Indonesia, and he's posting stuff like, if you want my money, you listen to me. And I'm thinking, Jesus Christ, number one, is it your money? Number two, no one speaks like that. And the problem they've got is the guys who've got money and who are successful are so turned off by the way they talk. And most of the guys who are successful, could buy and sell them anyway. So get fed up with it and stand up to it. You know what I mean? And I've just found it difficult to talk to someone. So I really do appreciate David got on a plane today. So yeah, that's the background to this. And David said, "Oh, no, I'll do it. I won't back off. I'll talk to you." So originally we were going to do online, and eventually he goes, "No, I've got to go to Jakarta anyway. So let's do it." So I do pay respects to him actually doing this when most people have not before.
Well, give the microphone to David, because I think it's really important for us to hear David's perspective of how you two meet and maybe your first impression. So who said hi to who first, David?
I think he said hi to me first by commenting on my post. And I saw it, I was like, who's this joker, right? And then we started texting back and forth or commenting back and forth. But I should have held out longer. $1,000, $100,000 to a charity of that gentleman's choice. Why didn't he take it?
He knows he's a chancer. That's why.
I should have held out longer. Maybe that offer could have come. Dang. But no, I love being here. BVT's quite the operation. Very impressive, sir. You know. No, I think there was a post that I put up. I was going to read it, but I was not told to bring my phone here by the owner of the home. So no, but the post was something. I think it was after I had talked to a entrepreneur, and the post was something along the lines of, "Hey, go big or go home," right? And that was the catchphrase. And I think for most VCs out there, it's kind of funny. They're not very active, at least in the way that I am on social media, I think. Most of them like will post one and whatever, but social media for me is a platform for educating a lot of the entrepreneurs out there. So my whole go big, go home was completely not the way the gentleman interpreted it over here. But yeah, no, for me it was like, hey, you know what? If you're gonna do this, why are you just messing with little tiny ideas that aren't really gonna make for anything? Just go all in or don't go, right? That was
views of things.
Yeah, in many respects, I guess.
Okay.
Maybe not as contrasting as it would be if some of the local guys were here, but they don't want to, so that's fine. But yeah, I think the opinions are quite different. Yeah.
But I think what we would like to appreciate is that both of you are experts in the field and both of you have experience. And let's start somewhere really, really basic. And I know a lot of the viewers perhaps are looking into what a venture capital is, or for hearing it for the first time, or what kind of options perhaps it's something they would currently consider. For a complete newbie, I'm just going to act like I'm a complete newbie. So from both of your perspective, what is venture capital and what is its role in the business ecosystem? Who wants to start first?
Okay, venture capital, or VC,
Yep.
its acronym, is a type of private equity. Okay, the term PE and PE firms tend to be more growth stage, but venture capital is technically private equity because it's not public markets.
Yeah.
1940s is probably after World War II is when venture capital actually got big. It's high risk, high reward. That's what it's supposed to be. And unlike other private equities investors, venture capital focuses on early stage. And the whole idea is you take high risk bets. But and this is where it gets to be a little bit of I guess some of the critics out there of venture capital would say this is like say the endowments. I'm talking strictly about the United States right now too, because that's kind of what I'm familiar with. Like, so the endowments out there, the university endowments, the kind of the rich folks, they put their capital on everything in the public markets, the S&P 500, the hedge funds, but they have so much money that they'll put some of that into alternative investments, which is venture capital, and what venture capitalists typically do, and I think it's a model that's questionable for most venture capitalists, except like the top players, is they make high risk bets on many companies. Let's say it's a power law. If they invest in 10 companies, 9 of them are expected to fail, and one's supposed to just dominate it all, right? That's supposed to be the model that won, right? Because for every Googles or Ubers out there, there's like hundreds of other companies that didn't make it. Now, that definition of venture capital, I think, is it worked in the 90s and the 2000s, but I think it needs to change, especially in the emerging markets. So anyways, that's why I'm the VC who hates most VCs. I hope I answered your question about what venture capital is. Yeah.
So that was strictly speaking from a U.S. perspective. You've been in the region for quite some time. How long? 2 years?
Yeah. 2 years now in Vietnam. I think the venture capitalists in Vietnam have adopted what the U.S. have done. You know, that's why I gave that definition. And it's kind of like, I don't know, trying to feed everyone Big Macs here. It might not work.
Is it the same in Indonesia? You're very experienced in this.
Yeah, I mean, I would agree with what he said. I think the venture capital concept worked very well in the 80s, 90s, when there was less capital, when there was less people trying to be a founder. the issue I see now is that every single person's trying to do it. So every middle class kid doesn't want to work at upper class kid doesn't want to work at McKinsey. They don't want to work at Goldman Sachs. They want to work at a VC or be a founder. So we have so many people, very young, with very little experience, with a very nice education, who are basically moving into this business. And the challenge is the more money you put into a sector, which is highly liquid assets, and more people copy. So you've got all these companies doing like spitting out companies like these Y Combinator and Antler, and they're just spitting out companies. The world cannot take all these companies. There are so many companies doing the same thing. And we've just got a situation now where this, as you say, the 1 in 10 rule is never going to work. And it might have, a few got through, but even those guys who got through, like the go-tos of this world, structurally there was always going to be an issue. And anyone who understands capital markets could have predicted the IPO. But you mentioned that here, everyone just get on your back, you don't understand the market. I said, listen, I've done this for years. It doesn't matter where you are, you've got to you can't just keep on paying for revenue. And a lot of these companies have had so much money, their only way to actually raise the revenue is paying for revenue. Now, it's very, very hard to turn that around. And you've seen all these are like massive ships, and none of them can turn around. And when people give the example of Amazon, it's a very daft example. He didn't have 1,000 competitors in the market. I mean, how many companies here are doing food delivery services or MSMEs or financial inclusion? None of them make money. Nobody's willing to pay for them. They're basically, a lot of them are opportunities which have been copied from Europe, US. They've been copied from India even, and everybody thinks we can blow up the price because there's huge population. We've got 270 million people. If 270 million people, if they drink 4 cups of coffee a day, that's $1 billion, blah, 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 blah. And that's how we've got to. It's nonsensical for anyone who's got any background in finance. And when I first came to Indonesia, I met a few of these guys, and they all told me I was crazy. And I'm thinking, well, she'd done this job quite senior for 16 years in the listed securities market. So I'm thinking, how come all these guys who've got no background in anything know more than me? It's amazing. And at the time, I told a lot of them what would happen, predicted nearly everything what should happen. People don't seem to understand that interest rates have cycles. The fact that you've got heads of state-owned VC companies going on TV and saying, it's not our fault, interest rates went up. You would be fired if you worked in a proper company, in a proper country, you can't come out, and I'm not saying Indonesia is not a proper country, but you can't say, oh, this is not my fault, blame interest rates. Interest rates are cyclical. You've got to start, you should plan that into your risk profile. You should plan the fact that at some point you can't keep on paying for revenue because someone else will come along. There is no loyalty in Indonesia. People buy stuff just for promotion. So as he says, this idea that 1 will succeed and 9 will fail, it's much worse than that here. I mean, some have succeeded kind of, but when you come to actually making money, I think there's less than 5 if you're lucky, and I couldn't even name them. I would say there isn't even 5, and that's pretty a damning indictment of a sector. Everyone can go around, and the problem is now, in the old days in VC, look at Jeff Bezos. He's still at Amazon, right? That's not the plan anymore. People become founders now, not because they've always dreamt about this business. Most of them have got no tech background. They've got an MBA background, maybe 6 months at McKinsey. They do it to get rich quick. They start the business to exit. That's all they talk about, exits. No generational company has ever been founded, ever, when the people set it up just to exit. And in Southeast Asia, most of these guys are out before it collapses. I mean, you've got ministers who are out before it collapses. You know what I mean? And no one looks at it and say, is that right, really? What about all the money that's been paid to these guys when the company itself is a bit of a mess? But people don't challenge it because the people involved are considered too powerful. So that's the challenge. But I think the playbook is broken. Yes, investment is important, but the way it's being done, I mean, it doesn't make sense. Simple as that.
So, for educational purposes, from both of your experiences, What is the best practice, most ideal capital cycle of the of the VC? Let's say when you invest in one and you get you get a successful return. How would that look like, in milestone wise, according to those that you've experienced?
I'm going to oversimplify this, okay?
Yeah.
For the sake of our audience, because VCs usually exit into each other too. There's multiple VCs in different rounds. But simply put, here's the ideal way to make money for VCs is first and foremost, they get money from other people,
Yep.
LPs, limited
People
partners.
put in money to
And then the whole idea is that these companies and these investors want to diversify their risks, and then these professional managers good managers will put their own money into. Okay, and what would happen now is from that point, they'll actually invest in early stage company. Hopefully, they'll observe them, and they should treat it more like, look, it shouldn't be just capital. Ideally, a good situation is, the whole point of venture capital is you put in money, but you also introduce your network. It's like almost an educational game. It should be that way. Things have changed. But you invest early, and that company uses that capital for the next 12 to 18 months to get to that next milestone, hopefully 2, 3x, right? And then they raise more money on top of that, and then they raise 2, 3x. Typically, it goes from Series A. So what I just described, pre-seed, seed, Series A. Then they raise more money to Series B, more money to Series C and D, and hopefully they IPO, right? And then this is a company that just keeps going. That's the dream, right? A VC that invests, double downs constant until it IPOs. Rarely does that happen, right? Even the VCs are actually, I hate to say this, I agree with them about something, is even they're playing the exit game and they kind of have to, right? Because a VC that came in and pre-seed sometimes just doesn't have the kind of capital to double down in Series C or D, in which case new venture capitalists have to come in to buy those rounds and keep going. So ideal situation is you invest early and you ride the wave all the way to IPO. Yeah.
So what's the most attractive, let's say right now, what are the most attractive VC investments right now, like VCs?
Well,
what kind of companies? Because you mentioned that nobody wants to do, financial inclusion.
Everybody wants to do financial inclusion.
Yeah.
Everybody wants to do anything which is trendy. So every year you will have a new topic. Mm-hmm. It'll be amazingly during Corona, it was cloud kitchens because nobody had the foresight to realize that when Corona finished, cloud kitchens would no longer be that interesting. But money got thrown at cloud kitchens. So money got thrown at cloud kitchens. So then you've got the MSME community. That seems to be the big one here. We need to digitalize the MSMEs. Without asking them, do they want digitalizing? They go out and give software or give something to these people, give an app, and then a year later go back and try to charge them for that app. Nearly never. They actually pay for that app. So there's just been a history of the last few years, what I would call fad investments. You've had your electric bikes, you've had everything. What else? A lot of financial inclusion, P2P lending, 15-minute grocery deliveries, coffee shops. That seems to be the case. People tend to invest in fads, in trends. The problem with that is there's so many competitors, and most of these businesses have no barrier to entry. The barrier to entry is purely financial. There is nothing. So there's nothing to stop a new come in today, could half the price, being subsidized by the VCs, and they would take GoTo out. It's that easy, unfortunately, because there's a new one now. There's the InDrive or something. There's an InDrive now, a new one. So InDrive is now everyone's using because there was Maxim from Russia, and they can just do exactly the same, cut the price, and there is no unique selling point, unfortunately. So people seem to be obsessed by B2C because they can build it up. It's even like EdTech. I don't know much about his story, but the problem with EdTech in Indonesia is people aren't willing to pay. The size of the population doesn't matter because those with the money have already gone to Princeton or some Ivy League university. And in the villages, the kids have to go out and work when they're 16, 17. They haven't got time. So we've seen recently, which was the big, I can't remember the name. There was a big EdTech went last year or the year before. Here, one of the big ones. But yeah, they're all good in theory. Every business here is all B2C because they want to use the population. People have never built B2B technology in Indonesia People always tell me that it's not possible. It's hard, for sure. But the difference is, it's far more sustainable. And I don't need all these failures and everything. I don't need the same level of revenue that I'm paying for, and I can still make the business more success because I have a USP. What I'm selling to clients in Indonesia, nobody else has, or very few people have, right? So certainly in a scaled up version, we're by far the biggest in what we do. So for sure it's difficult. But the VC's argument is always it's not scalable. We need to populate. It takes too long. But when it takes too long, some of these companies are 13 years old and losing $300-400 million a year still. I just don't understand the concept. They just want to, for me, they want to push up the price, use the population. And again, when it comes to investing, I know a lot of them, it's a bit of a boys' network where it's not just about the idea that they invest in the people who they know can get secondary fundraising. So again, you're limited very few people. There's a lot of clever kids in Bandung, ITB, UGM, that if I give $100,000 to tomorrow, they'll come back to me a year later and ask for another $100,000 because they haven't got the access to the capital. But if you give $100,000 to some of the Ivy League kids in this world, they will have the people to, whatever crap their idea is, they will have their network to help you later. So what tends to happen is all the money is in a small group of people, friends, the elites, and the one step below the elites, but nearly always here US educated. Well, I, as a British national, couldn't afford to go to a US university. So you are talking about a very small portion of society. But one of the reasons they do it is because if you give anyone else money, they can't get the secondary. They don't have the connections. So you're very limited on the number of people who are in the VC world. It's not a meritocracy at all,
If you want to add something to that, because I heard that to you, big population means quite some big opportunity. Hearing that statement, what do you think about that? Like, oh, it turns out that there's so much more to consider just because, it's not parallel.
I don't know Indonesia as well. And hearing from what Martyn has to talk about doesn't seem too different from the other markets in the region, to be honest. And look, the reason I say I'm the VC who hates most VCs and not all VCs is because, and I'm just going to be devil's advocate here, there are good VCs out there too. And these good VCs, what they're doing is, and I think Martyn would agree actually, but good VCs are looking for problem solvers, right? And the whole B2B, I actually agree with that. B2C, 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 but that's because these Gen Zs or the younger millennials, that's what they interface with, B2C. Like, I don't know, TikTok is a B2C facing, right? But I think some of the more interesting problems in this region are B2B, frankly. And yes, if you don't have the connections or you don't know the right families, well, how do you do it? But that's the point. Some of the bigger problems out there, I think, are B2B, and you should solve it, right? And you should tackle it. And I do agree that for a very long time, venture capital has been an old boys club. Like the people who have the connections make it. But there are VCs out there who recognize that and are trying to circumvent it, trying to crush it from bottom up or top bottom. And I admire those folks, and I hope to be one of them. But having said that, unfortunately, it's true. The economics of VC is structured in such ways, is incentivized that you want to invest in a company that will have a secondary exit, right? Because you need to make money. You need to make quick returns.
Yeah, getting that secondary exit, because the ideal one is to get them to IPO and then to earn back. So it's really, really interesting. How do we get out of that cycle?
I don't know, but again, that would only work if any of the VC guys understood IPOs, which most of them, the ones I've met, don't. In the region here, it's just been, people just think they can blow it up, and put it out in the capital markets. Particularly we've seen in the US in the SPAC market, 90% down average or something.
Yeah.
This is not just an Indonesia issue. And that's where it comes. It started to look like a scam, hasn't it? When a whole market is down 90%, it starts to look like a scam. It starts to look like it was pushed up by a bunch of people, and it was never worth that money in the first place. And it's true, it wasn't. Most of the businesses were never worth that money in the first place, and it was really a scam. And the people who got in earlier have made a lot of money, and in my opinion, ill-gotten gains. But many of them are considered market leaders and now and constantly ask questions on TV like they are somebody who we should be taking advice of, how to run a business. I don't know, because it's very different. When I worked in more listed security market,
Yep.
it's very meritocratic. I mean, there's guys in our office who went to like crap schools like me, and there's guys in my office who went to MIT, and there's guys in my office who went to Cambridge. It doesn't really matter. It's based on your ability to deliver. And you'll see that, my partners in this business, they were born working class, and now they are certainly not working, or they're working class, but have done very well, right? So that whole business is more meritocratic. It's the right people in the right jobs. The problem in the venture world is, and the way it's structured, everyone seems to think they can do it. And I mentioned before that, Japanese equities is one of the most liquid markets in the world. You can long, short, you can do anything with it. Futures in the equity market's big. Everything you can do there. But the good guys who manage money, some of my friends, they close at $1 billion because they reckon if they raise more than $1 billion, it will impact. And I'm talking 20-year professionals, because you can't get a job at the top in the capital markets game until you've got a track record. It doesn't matter who your parents are in a regulated market, right? Because I used to work for some big family offices. The kids had to work for me, all right? So that's just how it is. And because of that, the kids are well behaved, right? But yeah, I think the challenge is that it's a very different market. Here, consider that story about Japan markets, and then you consider the totally non-liquid assets that these guys are playing with here, and the non-liquid assets in relation to copies of WeWork, for example. Everybody knows that there's a huge issue having different durations on bonds or different durations on tenancies. It's been problematic for 25 years, but you just give it an app. And you say it's a startup, and you can get a valuation through the roof, and then you can sell to somebody, right? And a lot of these people, again, they're related. It's a small group. If you actually knew what was going on, and some people listening to this will know who I'm talking about or what I'm talking about. But yeah, often the venture capitalist is investing in the family's business, in the wife's business or the friend's business or the cousin's business. So the money's just going around amongst a small group. Then they sell out, having made loads of money before their company ever makes money, and then they launch a VC. Because having managed to do that, they're now VC managers, right? They're obviously qualified to do that, right? And that's the problem. There isn't enough professionals in the game here. There isn't enough experts. There isn't enough people who've made money, not given money, not made money. There are very few people I talk to, I believe, would be able to sit on, make money like we did in Tokyo and Hong Kong. They haven't got the experience, and they're always looking for the easy ticket. And the easy ticket is just roll money, get your friends in the next round, get out, go to UBS private bank in Singapore. That's how it works generally.
Wow. It certainly is a very interesting perspective, because does anyone actually, see VC as like a more long-term option? Because a lot of critics have said VC is specifically very short-term minded, in terms of, as you said, it's until ideally financing start, and then you pull out, or you ideally go all the way until IPO. So is it actually a sustainable way of investing? How would you put it? Or it's just constantly rushing the game? It's a rush in the game.
Okay. There's an archetype of how it should work, right?
Yeah.
And rarely do early stage VCs, let's say C stage VCs, stay on all the way to IPO.
Mm.
Rarely. There are amazing VCs who can keep raising the next round and do it. Typically, the baton passes happen. And look, VC as an industry is responsible for some of the greatest companies in the history of humanity, right? Like Google came out of VC, Meta, these are all great. And there are companies like Microsoft that didn't raise a single VC time, right? It's just purely profitable. So the reason the VC game got so hot is because suddenly, when there's something good and attractive like that, and you use the word innovation and technology, now everyone wants to be part of something sexy.
Yeah.
Right? I think the ideal archetype is that, hey, you know what? A good, responsible early stage VC would invest whatever money, 100K to 250, sometimes $1 million, invest, and they would responsibly nurture the founder with the right network and connections, give them advice, and introduce them to the next cap table to other investors who have more money who will nurture this. It's kind of like going from elementary school to middle school to high school to college. There needs to be a proper handoff. But where this man's right is that most VCs don't even think the long-term game. They're just in it for themselves.
Yeah.
So what ends up happening is they're just looking for secondary exits now. They're looking for the hottest trend now.
Yeah.
But if they thought about, hey, is this actually solving a problem? And is this something the middle schools or high schools would want? Things would be different. But the problem would be as abhorrent. But unfortunately, everyone's short-sighted. A lot of people are short-sighted. Yeah.
It's become about instantaneous success. And it's not just the VCs, sorry, it's the founders as well. I mean, the founders are often here, friends with the VCs. These are not, it's a very small network. I mean, they're all friends, right? Yeah. Jakarta International School, if I ever had kids, I'd send them there because it's the best place for raising money for the future possible.
Because network starts really early.
Of course. So here it's a bit different. I think what I find really difficult here is when the founders exit very early when the fund's losing. The founders leave early when the company's losing loads of money. And then they become a VC and start becoming an authority on something when they've never actually made any money anyway. So it happens a lot here. And then people want to, and then when you come on to the next story about nurturing people, again, it depends what you're looking for. The people who tend to be good at making money are the people who've always made money. Most people who've made money do not want nurturing by a guy who founded a company for 3 years, lost loads of money, and now becomes a VC expert. These guys can't teach me anything. What have they ever done? Yeah, they're good at rolling money. They're good at rolling money. But I used to have to make millions of dollars a month profit. You know what I mean? They're good at rolling money. That's not, I don't really sit there and go, wow, you're clever. So the problem is you've got a lot of very young people here, and not just here in Singapore, who are partners in venture capital, and not just Indonesian ones. And if you look at the background, they were founders of companies that are burning money still, or they are senior people in companies that are burning, and they are the people now nurturing the next group of people. So I don't know what people expect from this world. I just think you've got very few financial professionals who have made, or even business professionals who, without all the noise, have made millions of dollars in their own right. And if you see those people, their businesses tend to be very different, and they tend not to listen to the noise around them, because if you want to build a B2B business like BBT, it's not easy. And if it was easy, everyone would be doing it. That's the reality. The other people have got money to do this. The biggest technology company in this country doesn't make anything. It's a pure import business. Indonesia is a middleman economy. People think you're crazy for doing this. Even the guys who work at the biggest technology company in the country, they're like, wow, you built it here yourself. That's amazing. I'm like, mate, you're worth how many $100 million? You could do this. But it's people, I don't know about the venture capital has given, and I agree, some of the best companies in the world were formed by venture capital, but it's a different time. Not now every single person wants to be involved in this. It's a trendy, sexy thing to do. None of them have got a track record generally, a good one. And it's just become an absolute mess, to be honest. And I think it's damaging for the economy of the country when you've got so many, what I would call, these companies are zombie companies. They're going to fly around, they're going to sit around on the map. The ones that are listed are just being kept up by doing deals with, we've just seen one of the big ones, Alibaba, promising to not sell the stock if Alibaba is only using the cloud. That's not a serious way to maintain your stock price. The serious way to maintain your stock price is have a business that's robust and profitable. But that's very, very difficult because more and more people enter that market every year because it has no barrier to entry. Most of these businesses have no barrier to entry. An app has no barrier to entry. And everyone looks at the same thing. Everyone looked at Gorillas in Europe. Gorillas was a 15-minute grocery deliveries. And everyone thought, wow, we can do that. So somebody here, I'll do it. Not having a go at the people involved. Friends with the VC, let's copy them, blah, blah, blah. Raised hundreds of millions of dollars. I don't know how they ever make money. I don't think they can ever make money. And Gorillas, guess what? It's closed. So the idea they've copied has gone out of business. And this is the ludicrousness of what we're dealing with here. We're dealing with It just doesn't make any sense. And that's why you will not get an Indonesian venture capitalist sitting here, because I will sit there and go, what about that? What about that? How much money and revenue have you got there? What's the losses? I mean, there was a podcast a few weeks ago, and there was a guy interviewed, an Indian guy, and he was interviewed about how he'd done this great job raising $80 million for his business. And when you read it, and he thought, wow, this guy's done well. But when you dig into it, this guy's raised $80 million. His revenue last year was $1.7 million. How did he get $150 million valuation for his company if it wasn't just his mates anyway? So it doesn't make sense. No one with any rationality thinks it makes sense. So people won't sit there and discuss it. They'll go on a one-on-one podcast where they can blow, oh yeah, I've raised $80 million. I'm a great guy. You've raised $80 million, mate. How much money are you spending for that 1.7 million revenue? I think you're spending $10 to get 5. No, they're not. These guys are spending $20 to get 2. It is that bad. And I'm not being funny. My dad, who's 70 years old and an engineer, could easily spend $20 to get $2 back. There is no genius in that. All these guys are good at is raising money and spending on crazy things. But there is even one of the big VCs here came out and said, all I do is spray and pray, because how do I know what's going to go up? I mean, what the LP's thinking? I just imagine saying that to my clients in my whole life. They'd be like, oh, glad we're paying Martyn's fees, because he's just admitting that anyone could do this. And that's where we are with this. And unfortunately, they keep doing more and more bets on the B2C market, on their friends' businesses. I mean, all this 3 times, I mean, I take the piss out of him, right? So he basically, he never trusts a person with over 15 jobs on LinkedIn. He's got 28. I mean, just don't trust people. Just don't trust. I mean, no one in the right mind. I know some of the most powerful hedge fund managers in the world. They don't have 28. But all these guys, all VCs do advisor. I don't take advice about these people seriously. You know, look at who my advisor is. Probably the biggest hedge fund manager in Asia. That's a proper advisor, somebody I can listen to and take advice of. Not some guy who's lost loads of money 10 times and just managed to get bailed out by his mates in a venture capital business. It's just, it needs to change. But I think that, unfortunately, and I saw my arch nemesis the other day come out with something which I was very surprised about. He wrote on Twitter, the guy who I always wanted to come and talk to me, he wrote on, not Twitter, on Instagram, that this might be the investment into Indonesia, the first cycle is done. And he even said, and it might be the only cycle. And I think there is something of that, because I do not think investors from overseas are going to continue funding this frenzy of mass loss-making companies, because that's what we have here. Another online car business. I mean, again, in UK, they've already gone. Kazoo and everything, they've gone. So they copy an idea out of the UK, bring it into it. It's just not a tech business, it's a garage. And if you look at the history of the world, like all this online stuff, the reason Amazon have moved away from online into cloud and stuff is because the reality is people like to go to shops. Have you been to a mall here? People don't sit at home here and order everything online. It's 95% of all transactions are done in malls. You know, a lot of these ideas, financial inclusion ideas, the reason BCA don't include these people is because you can't make money from people with no money. This is not a new concept, so you're not disrupting anything. BCA don't want that market. Like all these trading apps, like allowing people to trade for like 2,000 rupiah and stuff. The cost is just way beyond. There's a reason, you know, all these like, what's it called? UBS, for example, have a minimum for their private bank. There is no money to be made out of half of these people. So the more people doesn't make money. If you're doing a business which is a negative, the more people in the country means more losses. And that is why most of the Indonesian startups lose more than others, because they just have more people to subsidize. That should be a benefit, but it's not a benefit. It hasn't proven a benefit here.
It's been hot potato per hot potato. This is a little bit scary when you dive deeper like this. If there are too many hot potatoes, how long before drastic changes need to happen?
I'll let him go in a second, but I would imagine we've seen companies go.
Yeah.
I am currently looking for a new CTO. I probably got 20 CVs from CTOs at Sunicorns, not unicorns, Sunicorns. That will explain to you where this market is going. A lot of these companies are in serious financial trouble. They are restructuring. They can't get any more investment. Their products very, very negative cash flow every month. I would expect within the next 6 to 8 months, we will see our first fund casualty. I can't see it being long before we lose a major Indonesian fund, because if you look at the underlying portfolios, it doesn't make sense. So you just have to look at the portfolios of these companies to say, burning money, burning money, burning money, burning money, burning money, burning money. So the drastic change will come when people, and I've been seeing the message the other day from a very bullish guy the guy, I've never heard the guy talk anything negative about startups and VC in Indonesia. To hear one of the most bullish guys in the market who wrote a very well-known book about this, to come out and basically say the game could be over, is a sign to me that he knows it's probably over. So I would imagine there is some serious unwinding of positions coming. I can't see why anyone would give more money, because, like the LPs, because to say it's underwater would be understatement of the year, I think.
You better watch out.
So yeah, so a lot of this, I'm learning a lot about Indonesia right now. So can I say a bit about Indonesia and Vietnam, and then a comparison, and then just a prediction about Southeast Asia? So first, Indonesia. What was really impressive, I just heard a few hours back about Indonesia, is that there are these powerful families that have been very, very influential in the economy for 3+ generations. In Vietnam, you can't find that, because 3 generations, it's like we're at generation 1 right now in Vietnam, because after war, the war-torn country, and so for me, that's like, wow, that's pretty impressive. That has its own financial complexities and things to play with. The one thing I do want to say about Indonesia, with my very limited knowledge about Indonesia, is one thing I think is so bright is, it is bad to have all these like wannabe founders and wannabe VCs running around. One of my biggest qualms about the U.S. legal system is wannabe lawyers everywhere. These lawyers everywhere. Like I feel, I forget, some stat out there, 1 in 5 persons a lawyer. I don't know, something like that. I don't know if that's true, but the point is that it's to illustrate there are a lot of lawyers, making America one of the most litigious countries in the world. People are suing each other like crazy. But you know what's good about that? People are fighting for their rights and suing the president, and corruption is low, right? So there's something good there. So I guess with all evil, there might be something good. And the fact that there's these powerful families and there's this money insular, hopefully over time that cleans up. And hopefully over time people get, because I believe market is smart and the market should get more efficient. And I hope that the youth in Indonesia, which again, the demographic is really powerful here, will start solving problems, right? Instead of Control C, Control V, copying, pasting, right? And if that happens, if the young people will focus on solving problems, then I think things could turn around. That's honest. I'm not even being a politician. I'm being like truthful here. In Vietnam right now, the population's young. What for me, being in that market for 2 years, what I've learned is that the VCs that have been there before me are just now beginning to harvest their first fund, and it's looking good. But I think DPI is a huge issue, right? What that is like money that basically returning money to LPs. In the region overall, there's a DPI issue right now, Southeast Asia. VCs aren't returning money to their LPs. So a lot of VCs have to start thinking the longer term game, right? And to again answer your question about, so is it all like blown up? How do we get back? I think as far as Vietnam is concerned, I think the VCs are well aware. There isn't the whole, I think, family supporting family thing going on there, just because things are so young in that country. Hopefully the VCs in Vietnam will invest in problem solvers and try to play the long game. And I think the VCs in Vietnam have to more collaborate with each other a little bit more, frankly. There is a little bit of a I'm not going to share my deals with you type of thing going on. There's the opposite problem in Indonesia, you know. And then now the commentary of the entire region is that like, you know what, if you go to Singapore, I feel that the rest of the world sees Southeast Asia as one unit. It's kind of crazy, right? I come to Indonesia, it's like so different from Vietnam. But if you go to the United States or Korea or Japan, Southeast Asia is just one big blob. And you know what's so funny? If I, as a Vietnam-based VC, invested in an Indonesian company, to me, that's diversity. I've diversified my capital and I'm making a bet. But outside of Southeast Asia, that's like you just made a Southeast Asia bet. So here's the problem. Singapore money, Southeast Asia money, no different. So when Vietnam, Indonesia, Philippines, Southeast Asia, like, you know, Singapore, Malaysia, all invest, all these VCs within Southeast Asia investing in each other or each other's company, I know that's diversity, but frankly, if you're eyeing US IPO, which I think more people should, IPO outside of Southeast Asia, that's just you playing that club game. It's like, seriously, that's what it looks like. So Southeast Asia as a whole, I think, is waking up to this too. They're realizing, wait, we're just kind of funding each other constantly. They don't mean to, but that's what's going on. So how do we get this out? How to break out of this? Well, early on, we need to introduce the Japanese money or the Korean money, and for that, you need sophisticated financial players, the right relationships, right? Not just people who are playing VC or playing founder. You need founders who are actually solving problems that like American money, Japanese money is interested in, not just, hey, I'm a cool wannabe VC, I raised $2 million, or I mean, cool founder, raised $2 million from VC ABC, and then I raised the next round. And so, you know, I've still not seen a proper Series D company in Vietnam, for example, today yet. And hopefully that changes. But the way to change that is, again, Southeast Asia as a whole, we got to stop the kind of the inbreeding funding. We have to start bringing outside money at the later stages. But to do that, you need more sophisticated players in. Yeah.
So you got to up the game inside as well to be more attractive.
What he said about Vietnam being a young economy, I think that has quite a lot of benefits. I think the biggest benefit is meritocracy. There is, I actually met a friend of a friend's when I was there. He's a VC guy, and I had a chat with him, and he was saying there's much more meritocracy there. It's not just a small group of people running everything. So that's the benefit of a small, you know, of not being so entrenched within a small group. Yeah, I mean, the issue is, I don't know, in the past, in Indonesia, and again, I don't know the venture capital world at all, really. I don't really claim to. I just know that it doesn't make sense from me as an investor. I wouldn't give money to any of these guys. I think, again, there's a huge mix-up because my close friends are quite significant capital markets guys, and none of them understand it either. So that's a problem when it comes to IPOing. I mean, everybody I know knew most of these IPOs would happen. What they've been very good at, I think, in Indonesia, very good, is selling until now, because I think the story's gone on too long. But the last 5 years before interest rates started going up, they were very clever at using all their US university connections to, I've got powerful connections in Indonesia, Indonesia demographics, blah, blah, blah. They sold the story very well. There's a lot of guys here who raised a lot of money from US as well here. There's the US, particularly a couple of venture capital, a lot of them raised money from the West Coast, from their university days, big money, guys with brand, family name, etc. And also they raised significant money from Abu Dhabi and such. You know, I don't know if it'll happen again and Son as well from Gojek. Son was also invested in several, from SoftBank, invested in several businesses. Now, I think Son's pretty much game over him. You know, he's made so many bad bets, it's ridiculous. But I think he was part of the feeding frenzy here. When he started throwing money around like a drunk uncle at a wedding, I think everybody thought, right, wow, let's get a bit of Son money. Even people contacting me, you got to get some Son money, get some Son money. Everyone knew this guy was just writing checks for fun. And then a lot of these guys got involved with let's how much. So there was quite a lot of foreign money come in here. The problem has been that they aren't the ones who's benefited. The ones who benefited here from any kind of VC startup world is the founders of the so-called unicorns, who are out of the business now with a lot of money. They've done very well, despite their companies still losing hundreds of millions of dollars. So from an investor perspective, you look at the Indonesian market, you're like, All right, okay. I'm a billion-dollar business site in Japan, and I get asked this by my Japanese guys because my good friend has a $80 billion business, but he's just set up a private part of the market, but only in Japan at the moment. And he asked me about coming to Indonesia, should I? And I just said to him, I couldn't find you anything to buy here to invest in because the way it all seems to be front run. And if you're not part of that small network, a lot of these guys are already out. The guys who've made the money now, I think for the first couple of years, the VCs made the money as well. But funny enough, I met my private banker from UBS in Singapore when I was there last time, and his next meeting was with a unicorn founder here. So these guys are taking the money out and giving it to UBS in Singapore. I've taken most of my money out of UBS since I stopped having a job. Basically, I've been investing in the business. And I think if you look at our company, with most of the money coming from myself, of course it's not easy, but there's a lot more ownership in it. And I have staff tied in long term. My aim is not just to get rich quick. I've been through that before, and I'm trying to actually create a legacy as well. I don't think anybody else is, to be honest. I don't think they care. If somebody came and offered me $100 million today, I would say no. And pretty much sure everybody knows I would say no. So that's the difference. It's what you're trying to achieve, what your game is, what your growth. But I think in the future, I think Vietnam's a different story from what I heard. I don't know how you're going to be very easy to attract foreign investment here. And I also think some of the big families here who've been bailing out their nephews, their kids, their grandkids are probably going to say, right, you get back to the coal mining, no more of this, my friend, because we are making money on our businesses that we've had for generations, but the businesses that we've invested in the last 10 years through you and your friends are absolutely burning money. So no longer, I just can't see a conclusive story for putting more money in here at the moment because there is just so many issues,
Yep.
So that's really insightful for me. There, okay, I should say there is a startup in Indonesia, for example. I'll mention a few. Can I name drop a little bit? So, okay, so there is a startup in Indonesia that's, I think, as far as I'm concerned, is doing everything properly, and it's Rukita. They're solving an actual problem, housing problem for young people, and they're in it for the long run, and they have the right as far as I'm concerned, the right investors. And what I mean by the right investors is, and I think Martyn brings a good point. There's all these VCs who are raising money from, I don't know, their friends and from the networks, and they come. But at the end of the day, in the long run, those VCs will, I'm not worried, they're going to die out very quickly because, it's just not working. It's not sustainable. Same thing with those founders. The wannabe founders they're doomed. They're not going to be able to raise. Yeah, they get quite rich doing it, but that's the thing. It's kind of like this. It's kind of like, have you seen the movie Catch Me If You Can with Leonardo DiCaprio? There was a time when you can trick the checking system, but now no more, right? So it's almost like if you're going to be a crook, do it now, right? But people are getting smarter, and we're going to catch on, and everyone's going to cut you off. And so that's my point, is something like Rukita or Vietnam, like Tech Co-op. These are all investments that were proper. And proper investments, when you do go to the Japanese and the Koreans and the Americans, they do proper DD. It's not because we're buddies. I like the business and I'm going to invest. That is sustainable. That is sustainable. But yeah.
What you say about the US, I mean, Sequoia followed on to Lotsia, which has been a disaster. Tiger followed on to a Lotsia, which has been a disaster. And that was purely through friends again. Mates, mates rates, right?
So there's got to be a certain boundary.
Right.
What for people like that, what is a red flag that you need to see, like you really need to remember?
The cap table. So the first thing I look at is the cap table.
Okay.
So as a VC, one of the the DD process, I look at the cap table and I look at all the investors on that cap table, and I ask myself and then the founder, who is this? Who is this? Who is this? Can I talk to them? How'd they give you your money? If the cap table is full of their uncles, aunts, and cousins, It's a huge red flag. Or hey, you know, your former boss's boss is investing in, but there's no third party arms like this in player. Okay, now that doesn't mean that, oh, there's a bunch of angels, let's say, right?
Yeah.
And the thing about angels are they're individuals, or let's say no institutions in there. That's not necessarily a bad sign, but it could be a bad sign if these angels are like all your cousins and brothers and sisters, right? So that's why the DD is important. Now, let's say there's institutions there. Is that a good sign? Not necessarily. Now I'm looking at, wait, is this some accelerator or some weird VC that's out of nowhere that's just playing the valuation game, right? So the red flag that at least I look for, one of many, is the cap table. And honestly, that's why 99% of the founders that I talk to fail sometimes. Is the cap table is very ugly. It's ugly. Yeah.
Again, that comes back to a lot of these people who start startups don't have any money. So for me, sorry, here different, but the way it should be for VC, a great idea, gets investment, etc. But the problem is, not everybody can invest themselves in day one, right? That's a major. So the idea of VC again is providing capital to those who need it who've got good ideas. But because everybody's jumped into it, those people get sidelined basically. So you've just got a much smaller group of people doing it, right? So I just think the more and more, I don't know. I think over the next couple of years, there's going to have to be a significant change, because what he says about the cap table is correct to a point, but you've got to know the circumstances of the people. If those people had no money in day one, maybe they needed a Y combination of people. Yeah. And if you had no money in day one, another issue you've got is you might have to give up 30 or 40% of your business, which also screws you up for the next level. So young people often here don't really understand. You know, the people who are not in the elites, they might give up a significant amount of their business so when it comes to a bigger investor coming in, it's already been cut up to heck. Now, while I would agree with you in cases sometimes, for our cap table, it's just like me, but the other people are my friends, close friends, right? But we don't have any institutions on there. So it's purely a group of close friends, actually. But it's their private money of close friends. So, but what I guess that's allowed us to do is grow to a size way beyond what most people could grow to without venture funding, right? So the problem, I think, is for a lot of people who don't know the game, who are not the experts, they may get cut up early doors, sell up too much, constantly need money, constantly raising money, and then a bigger VC comes in, doesn't want to play the game because they don't own enough share. There's not enough to take still. Yeah. Because Y Combinator owns this, and Antler owns this, and all, the guys only owns 20% now. And yeah, that's also a potential issue.
Yeah. By the way, I was commenting on the whole. It's okay to have friends invest in you. That's why it's called the family and friends round. Yeah. That's okay. But it's not okay what Martyn pointed out earlier. When you're exiting your own company to your family members, and then your entire cap table is clearly like you gave 15% of your company to your uncle. That's problem. Wait, who did this? Who does that, right? That shows me you're trying to somehow play a dirty game, for example. But, actually, so what could be a solution? I think Y Combinator did something wonderful for the United States, Silicon Valley initially. And yes, Y Combinator is global, but Y Combinator has become just like another Harvard, right? It's become like something else, I think. And look, I think it's one of the best accelerators in the world for what it is, but I don't think it fits Southeast Asia. I honestly don't. So I have ideas and thoughts, but I'll share that a little later because I want to make sure that you ask all your questions. And but I do think there's a solution. Yeah.
All right. Well, I'm not stuck to questions, by the way, but I really want to ask you, because the comment has always been that there's a lack of knowledge, lack of experience. Do you think founders are equipped with the knowledge in making that move? Because when you want to go into a VC, right, when you're changing the business model, you're changing the entire structure of your business. So there seems to be an issue that there is no proper education or access to education that people actually require before they decide to make this move. What do you see on that? I know both of you have something to say.
I think the problem here is people think that they've got an MBA and that makes them good at everything. Like maybe you can fly an aeroplane or you can do brain surgery. Because that's always what I get told, like, oh, well, I've got an MBA. I'm like, yeah, but mate, that doesn't give you the ability to give advice on technology when you're not a technologist, you know? And that doesn't give you the right to give advice on IPOs when you're not a banker. And so I think getting the right mix of, and I think every country is different again. From what he's saying, it's far more meritocratic. So, you know, I think that places like Antler here do provide a more meritocratic. But again, the people who run Antler are the founders of failed VCs here. So again, I mean, who are we taking advice off here? Are we taking advice off the top guys in the market, or are we taking advice off guys who've failed 3 times? Because you know, there is several jobs here held in advisory government positions are done by failed founders. Now, I'm not saying it's bad to fail. Everyone fails doing something, but it's kind of glorified failing in Indonesia. I think it's different. Maybe so. People like Ambler, I think, open it up, and maybe Y Combinator, open it up to more people. But it's very hard for them guys to get anywhere because there's just too many companies being launched. I mean, Antler launch how many companies a year? I don't know. Oh, they always advertise we are giving away 50 grand. 50 grand is no use to anyone, in my opinion. I don't know what the point in it is. Okay, we'll give you more in 6 weeks. I just think those businesses set up to fail. Really, I don't think it's going to get anywhere. But I think it works. That does open the door here to the people who don't have those connections, because outside that, I'm not aware of many startups that have been funded that are not from a small set of society. Maybe I'm wrong, but if I look at in Indonesia, I mean, and I don't know about this company he's talking about, but if you look into most of he's his brother, he's his own. They're a group of people who have the connections to bring the money, or they had the connections to bring the money. I think the problem is now foreign investors are looking at Indonesia as big and thinking, hang on, how much money have they put into fintech and how much of it is successful? How much money is coming back from these investments? We saw Investree recently, another nearly $1 billion company wiped out. I mean, we've seen multiple companies that are on the verge of being wiped out, you know. But where did it, again, comes back to the lack of understanding. Where the valuations come from when a company with 1.7 million revenue is worth $150 million and can raise $80 million. That can only be a group of friends. You cannot tell me that's big. You can't say, oh, it's all on potential. I mean, anyone can say that. It's just, it's so pie in the sky. It's hard for any person who understands, you know, to actually get their head around it. So I think Vietnam is very different because from what he sounds, there's more opportunity for the normal people because it's more meritocratic because it's not just a very small group of people. And there is a lot of Vietnamese who've got their education in Europe, but a lot of it, I believe, is from grants and things from I was talking to the head of the European Chamber of Vietnam, and there's lots of scholarships, right? So it's a bit different here to everyone going to Pepperdine and coming back with all their connections, right? So the problem is how it's like everything in Indonesia. They don't want the foreigners. It's like when 25 years ago in Japan, in capital markets, there's a good book called Ugly Americans. It's about some American guys who turned up in Japan and ripped it up. They did so well and they made a lot of money, right? And one of those guys I know quite well. I didn't know him when the book was written, but I got to know him later. And it's just about these guys who went there and they were better than the locals at the time, and they ripped it up and they took over. And what happened was, this is when the Japanese markets opened up. And what happened was, the only way the Japanese banks could compete was by hiring foreigners to do a lot of the major jobs. Move that on 20 years, a lot of the major jobs are run by the Japanese again, but there was a learning process. In Indonesia, they really don't want to be hiring foreigners to run businesses, right? And they think they know it all, and foreigners don't know anything. And the issue with that is, how many people who are managing money have a track record successfully of ever having managed money before? How many of these founders have got a track record of making money. So they don't bring outsiders in. They just have a group of people. And again, people always say, oh, we're a VC. We don't just give out money. We nurture you. Who's qualified? They've not done anything in their own right. Do I need to listen to the head of this VC who took his own startup bankrupt after raising $50 million? The expertise isn't there to nurture people because no one's sat there on a track record. There's nobody I can think of who's sat there on a massive track record who's made money outside their family business. So, yeah, it's a challenge, I think.
So, kind of, there's so much to say here, but going back to your original comment or question about education, I agree with him about the whole MBA stuff. Sorry, MBAs. But what I do want to mention is part of the problem is a lot of founders are ill-equipped. They are. They come, they've seen, I don't know, Silicon Valley, the show, or they saw social media, the movie, or they're reading some article about Elon Musk, and they're like, this is cool. I'm going to do this. And they read a bunch of things on the internet, and there are some great resources out there, but it's kind of like trying to learn how to do Kung Fu by reading on the internet. It's kind of tough. And frankly, the only way you can learn business is by just doing it. You have to go through trial and error, and along the way, maybe if you're lucky, you'll meet some good mentors and good people, and you work for some good companies, and you'll learn. Unfortunately, in the startup environment, you can't go to like some university and get a degree on entrepreneurship. I think that's one of the most ridiculous things too. Yeah, they do. I know they do. Here, the education system for entrepreneurs were supposed to be these accelerators, and I use the past tense now. My biggest qualm with accelerators in this region right now is some of them don't even give money upfront. Like, 50,000, yeah, that's a little, let's say, but some of them don't even give money. They're like, hey, come here and I'll give you advice and I might give you money later. I think that's evil right there, straight up. And then there are accelerators that will give you money, and then they'll ask for some of it back right away. They'll give you like 100K and be like, you need to give me 25K now. That's their way of making profit, right? That's using other investors' money to give the money and then taking money back. Hey, that's crooked too. Yeah, it's wrong. These are the quote unquote educators right now in this region. We got to change that. So first and foremost, what we need in this region, and one of the initiatives I'm working on is it's called 84 Bootcamp. 84 is the country code of Vietnam. So we're going to start in Vietnam, and I really want to expand to Indonesia. What that initial is a pre-accelerator. What I realize is there's a lot of good materials out there. There's a lot of good people out there who should be contributing. Like people who are successful. But you know what's the problem with people who are successful? They have no time. Do you have time?
Yeah.
No. Do you have no time? Yeah. You know what?
Come, you have time to sit here.
Yeah. But here's the thing is that some of the best practices and some of the best knowledge and information out there is dispersed. And what we need to do is curate it and then make it a DIY thing. Here's the thing. There are some things accelerators can do for you, but most accelerators are just fancy pitch deck. I will teach you how to pitch better process. They're not really helping with the business. So look, just give the founders if they're grateful enough, if you give them the right information, the right access, and allow them to just DIY, do it yourself, and see how they go. One of the best things out of venture capital to any investor, angel investor, I know you're angel investor, right? So what we look for is, are they executing? Are these people actually doing what they say they would do? And wonderful thing about a DIY process is that if a founder learns, hey, this is how I'm supposed to build a product or find a team member. Well, now they have the information. We want to see if they execute. If there's a good way to capture that and present it to the investors, that's good. We have more information. Now we know that this founder is for real, not just a entrepreneur. Now, accelerators need to improve in the region. There are a few good ones out here, but most of them are terrible, like straight up. And so I'm building one too. I'm building one, and I'm hoping that it'll be great. We're focused only on Vietnam at the moment, just because, and I go to the same issue. Money's not infinite for me. I don't have all the money in the world. I have a limited amount of resources, and I have to focus and then expand. And that's the thing about VCs. A good VC is playing the long game. They want to succeed at the project that's in front of them and the founders in front of them, so they can continue to do what they do. But if they take shortcuts that Martyn just mentioned, you're gonna play VC for maybe 10 years, and then it's game over. Yeah, I think it's like
And that's the issue, right? They've done this cycle now, I think from 2010, and Indonesia was the place. And we look at it now, and whatever anybody says, the VC and startup world is creaking because of the sheer losses that have been made by companies and the sheer money that's been made by a few people. But I do think there's a loss of trust amongst it. And yeah, I think it's difficult because how do you get those people who are professionals and who do want to help involved? Because most of those are really busy. And I often laugh here that these guys spend the whole time doing events. It's like there's not much difference between startups and BUMN. You know what I mean? Which is the state-owned enterprise, right? Constantly cutting ribbons, constantly signing MOUs, constantly hiring out the Park Hyatt. And there's events constantly from companies that you know don't make money by just looking at the balance sheet. And everyone's so happy. There's no accountability. You failed, you tried. That's great if you're from the top level of society, but what about all the people who've really tried and haven't failed? You know, I see a total lack of accountability here. If anything goes wrong, it's blamed on interest rates. It's the classic. Blame it on this or blame it on foreign investors, on the VCs blame the startups for not getting the stuff together. I mean, that's why I fell out with my good friend here, because he just posts on his LinkedIn page, you founders are such losers, blah, 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 losing all my money. Well, number one, it's not your money, mate. And number two, that's not really your job, you know. I mean, I think one of the reasons we've been reasonably successful is because it's our own money. And we live and die by the sword. But it just, for me, there's so much too relaxed in this whole VC world, and everyone seems to be so like, it's job for the boys. How do you get people involved who really care? Because to be honest, it's a two-tier system. I don't attend any VC events. I just find it a lot of backslapping, everyone pretending things are brilliant, you know. And again, as I said earlier, you don't see those people outside that. Now, if I'm running what I run here, I'm a B2B business. I need to be meeting potential clients. I'm not going to meet any potential clients at the Tech in Asia conference. I'm just going to meet a bunch of people, taking pictures with people who are from VCs, who are going to make those VCs again think they're the best thing since sliced bread. I want to be meeting people who I can make clients, clients to sell to the business. Them people at the same time are not interested in mixing the VC world because they also don't understand it. So these real mentors who could add real value, the people who've built real businesses, the people who've got real success, they tend to keep away because both sides tend to keep away from each other. So there isn't really a crossover where the people who've built businesses, made millions of dollars, actually get to talk to those people. I actually get invited lots to go out to coffee with people. I just don't have time, as you say. There's a lot of young kids go, I have got no family money. Can you help me learn? I said, listen, I'm not an expert in raising money, but I do feel you because you don't have a chance. And it's a very two-tier system. A lot of the people will hang out in that circle and nothing will matter. But they just don't see the cross, the two branches of society.
We need more people who have okay, so here's a problem with business and fundamentally, okay, in the region I feel is the reason Silicon Valley is Silicon Valley today is because of Stanford University, frankly. Stanford University didn't encourage their students to stay around and get creative and whatnot. There's an artificialness is what I'm saying. The reason the Korean and Japanese startup market exists today, or Japan is starting to exist in Korea, the startup market is like booming, is because the government got involved and got really pushy, frankly. I feel there's a pro and con to that. Sometimes I look at a Korean startup, I'm like, government subsidized, right? Vietnam, there's like zero government subsidy. It's like sucks in some ways, but it's good in other ways, right? It's pure market. But here's what I'm saying. I was talking to a friend in Singapore, and he said something very crazy. He's like, you know what? The Singapore market, the economy, so sucks, depressing. When I see the Singapore economy, it's so uninspiring. But the politics, so inspiring. The opposite in the United States. Your politics is uninspiring, but your economy is inspiring, is what he told me. So what he's saying is that like the politics is creative, innovative, and exciting in Singapore, but the economy is not so much for him, the startup scene. So he was talking about the startup scene in Singapore. Why I thought that was powerful for me was this. The reason I think Singapore's politics is so inspiring is because there was someone named Lee Kuan Yew who took it for the team and built that country. You need somebody in Indonesia who like the initial VCs have to have like the Stanford mindset. Yeah, they're in it for the money. No VC's like a martyr here. They're here to make money, but they also have to have a bigger than me mindset. You have to have like the founding father mindset. Unfortunately, I don't think there are many VCs with that mindset. They have to think about the greater ecosystem. They have to listen to someone like Martyn and be like, look, he's busy. How do I get him on video and create a perpetual like model? How do I get him to my events? Because clearly he's not going to come. Like there's got to be these people who care about the ecosystem so much that they're constantly trying to solve this problem for the country. So it's not only like me, but how do you find those people, right? And those people need to come. And
they don't want people that might call them out. That's why it's so weird. Right?
In some ways, though, here's what I think the solution is now. We need, we need four types of people working together. We need the foreigner who's like passionate pilgrim, like him. He's a passionate pilgrim that moved to Indonesia. You need him. You need the cultural chameleon. You need someone like you, someone who's Indonesian but has been educated abroad, and so you are a chameleon. You know how to adopt the local and the foreign, right?
People with identity crises, thank you very much.
Yeah, I know. So you need the passionate pilgrim, the cultural chameleon, and you need two other people to make this genuinely good. You need the local lion, right? Someone who's local, who never went abroad, but cares so much about the system and the country that wants to improve it. And yeah, over there. And then you need the people who will never come to Indonesia but for vacation that are over there, the friends of this guy who will what? Help fund it later. So if these four people, archetypes, care about Indonesia enough to do something about the ecosystem, we have a future. But the problem is everyone's playing their own separate game, I think. That's how I see it. Yeah.
The unity. But it brings me, I think we're walking here in duration, right? So and I think it's also really important just to wrap it up a little bit, considering that it is very challenging. It has been very challenging to sustain VCs, but also at the same time, VCs in the last almost, over 10 years, let's say since 2010, have been very much influential in terms of this starting up new unicorns and something like that. So that has significant residue in the economy. It has significant, it's already significant building blocks. What is the risk when it fails? We've seen before, let's say hot potato to hot potato, 2008, the last American Depression and things like that, that happened, the real estate bubble, hot potato from hot potato. This is a risk that not enough people talk about because it's already so it's already so indented into the economy now in the last 14 years.
I think that's the issue. People don't want to talk about it because it is, as you say, it has been the biggest growth part of the economy, really. I mean, all these unicorns and soonicorns, and Indonesia was the big hope. But yeah, as I said, there's been a huge amount of money invested, and the returns haven't come back. They haven't managed to become profitable. It's not worked. The idea that you can suddenly put up the price and everyone will carry on paying has been a massive failure. So I think there's a lot of figures. I mean, a lot of the state-owned enterprises lost a lot of money already on the GoTo deal, right? So there has been questions about how come the government was investing, I think it was $800 million in an IPO. There's been a lot of claims that people have put pressure on to underpin the prices of the few listed unicorns due to the failures, I would say, of the IPOs to not put another, that's the honesty. And yeah, the chances of any of these companies IPOing now is nearly zero. So they are absolutely stuck needing to raise more money. So you've got a whole group of soonicorns, which, judging by my CTO inbox for looking for a person, you're going to see multiple, as I'm looking for a CTO, many of them applying Soonicorn CTOs. So it really makes you think, these guys. But again, look at the inflationary pressure they put on this economy with the salaries is beyond belief. I mean, you had a lot of people working in startups here getting paid like a Goldman Sachs VP.
Yep.
Mid-level people getting paid like Goldman Sachs VPs. And
Yep.
I was looking at these things going, you were a senior data analyst and you got paid that at a unicorn. Everything just went completely nuts. The spending went nuts.
Yep.
So the salaries here Vietnam is now much cheaper than Indonesia. The salaries are kind of out of control in tech world in Indonesia. And it's starting being pegged back. But you've got a whole generation of people who are used to getting that kind of money. These guys are getting like real money, and they're working for companies that were burning money. Yeah. So it's as you said, facing the reality now. I interview people and I just say to them, you realize you're never going to get paid this again unless you move to Singapore. It doesn't work because you can't pass on the cost to the client in Indonesia. So there's no point in saying, oh, we're a startup, we're just as big, we want to have our salaries the same as Singapore or Japan. Doesn't work because you can't pass on the cost to the client. So the product cost I can't pay somebody the same as I could pay somebody in Japan because I can't sell my product the same as I could sell my product in Japan. Basic common sense. Whereas here, even on B2C products with tiny margins, well, negative margins in many cases, they decided to pay everyone. I mean, how many? I think they had 140 VPs in more in GoTo getting paid ridiculous.
Yeah, it's also caused a lot of payment gaps in terms of startups and non-startups, and that's why startups have become so attractive, especially for young people.
The payment gaps
because they think it's like, oh, it's a fresh grad job, high payment, and things like
it's
that.
It's absolutely true. When we
for the beginning, for the last, let's say.
So one of the people who applied to be our new CTO, he is a CTO at a major Indonesian company, not a startup, and his salary was 3 times less than one from a unicorn.
That's why I mentioned before.
It's a symptom of in some ways the U.S. is to blame. If you think about it, Uber is making no money right now, right? But the whole Uber theory was we're gonna invest. It's gonna go. We're gonna monopolize the world with this concept, and it's gonna go, right? The name of the game is monopoly for VC and unicorns. The term unicorn is not that old. It's like less than 10 years old, I believe. It was 2014, 2013. Allison Lee just coined that term and became big. But I think in Southeast Asia, it's kind of like this. My mom used to say this, is like, don't take shortcuts, right? Like, go the proper way. In Indonesia and Vietnam and Southeast Asia in general, including Singapore, we should be looking for zebras. Not unicorns. Are you familiar with the term zebra? Yeah, it's like something that is profitable, right? Is good for the economy and profitable, but that doesn't mean that like you're overlooking what's good for your problem solving for the community, right? So yes, you're looking for profitability, and you're also trying to solve something. And I hate to use the word impact here.
I was just gonna say,
it's not an impact fun way.
Without somebody mentioning sustainability.
Yeah, because
he just did.
Yeah, sorry. There's an impact washing thing going on.
All right.
I don't like the word sometimes because it's been overused. But the point is that look, what's good for the community doesn't necessarily mean you're losing money. You gotta. So the challenge in Southeast Asia, like, look, they had it easy in America in some ways. You just need to make money. Go, 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 go. Here, you need to make money and you need to care about the country. You need to do both.
Yeah.
You need to do both. Otherwise, I don't know, for me, you're not that attractive as a founder. So I'm very ambitious. I'm looking for founders who are doing both. You are not only gonna make money, but you're able to take whatever you do and lift up the country too. I know. I'm asking for Superman. Actually, let's not call it zebras. I'm looking for super donkeys. Yeah.
Donkeys? Okay. They're not very fast. They appreciate the process.
Sorry?
The donkeys are not very fast.
Not very fast.
Yeah.
But they're cute, and they show up on Shrek as a protagonist.
What?
You got a protagonist.
Donkeys are okay, all right?
So the last question.
So basically, to wrap up it all, I just want to say we've heard so many different, so many different realities that is happening in the region. We focused on the region. And there's also a lot of opportunity still. There's a lot of possibility for change if change will happen. Something needs to initiate the change. So let's say in the next 1 to 2 years, if we still want to be optimistic about VCs, what needs to happen and what are your hopes for it?
Martyn needs to become a VC. Yeah. Okay. I just wanted to say that quickly before.
Do you trust him enough? No.
So what needs to happen to VC? Well, VC is not a standalone.
Yeah.
It's part of an ecosystem. What has to happen is not only do there have to be better VCs, but better founders and better investors into VCs too. So for that, I think I sound like a broken record here, but we need more people that care about business and making money, but also about the ecosystem. Okay, one thing. We could make fun of each other all we want here, but one thing I do want to say about Martyn is, since that was the last question, is I really appreciate this forum right here, because he wouldn't be doing this unless he cared about the country. You actually do care. I know you joke around and you poke around and you call people out on this and that, but if you really, really get down to it and think about it, he wouldn't be expending the energy into doing this. It's like having a girlfriend or a boyfriend that, the ex-boyfriend, girlfriend, or whatever. If you don't care, you just kind of move on. You care. That's why you say things about it and you yell, right? So kudos to you for that. And BVP's awesome. I think what, and I think this podcast should be called MTV for Martyn Terpilowski video. Okay, moving forward. And thank you so much for your awesome questions and beautiful presence here.
Yeah. Oh, thank you.
Yeah, I think there needs to be some trust come back, and I would love to see a change towards the B2B world and stop just thinking of the population. And I still see these guys going, it's still all about the population, it's still about the demographics. Unfortunately, not one of the companies trying to take advantage of that has made money. And the problem is when you focus on B2B, your costs are so huge. Sorry, B2C, your costs are so huge. Now, it's not been easy doing BVT. But the reality is my costs, even though I've got quite a big office, quite a lot of people, my costs are nothing compared to a B2C because I don't advertise on TikTok. I don't have my face on the side of buses. I don't advertise on any of these. We don't, basically that guy over there is my full advertising guy. He does everything. So all right, we'll be on TikTok next, he said. So we basically run it I talk to a lot of events. And we just get the brand out there. And once the brand's out there, it's about getting the technology that works. So I really hope that more people, as David said, try to solve problems from a B2B perspective. Mm-hmm. Not just think, well, how can we get money quickly? Because as I said, no generational company has ever been founded by somebody whose sole plan when setting up the business
and then walk out.
Is to walk out. Now,
yeah.
Do I believe that the people doing some of these, 15-minute grocery deliveries, that they'd always been dreaming about doing that? No. I think they probably are trying to sell their own stock as quick as possible while the market's still at a certain level. Well, if everybody's doing that, you are not really setting up the economy for the future. And that does scare off investors because particularly late-stage investors who see, what they need now, because all these unicorns, they need late-stage investors, and I just don't see them being there. Because why would you fund on top of, costs? The only way they're cutting costs now is by sacking loads and loads of expensive people. But does that mean your product's going to get impacted? There's still so much to think about. So, yeah, not just having fad investments and getting the trust back of people. Because for me, when I turned up here with having a no venture capital background, it blew my mind what I saw. And when I ever brought it up with anybody, people goes, oh, you don't understand. Like, well, okay, I don't understand. So explain to me why I'm wrong. And it just doesn't happen. So I think people need to get out of the echo chamber, stop constantly, blowing smoke up the bottoms of people who haven't done that well, and actually start to critically analyze the market. Because there's too much of this backslapping here, and people need to get the VC and startup market economy needs to also become part of the real economy, which I don't feel it is at the moment at all. In Indonesia, I'm part of the real economy. I never meet VC people, ever. David's the first VC guy I've met in absolute months. I'm just not part of that economy because I'm sick of listening to all the noise when nothing happens. They all like smugly, oh, I told you, and I'm saying, you told me what? B2B won't work in Indonesia. Have you been to my office? You told me, and again, you were wrong because everything you've been wrong in, and you're wrong about this as well. So I think there needs to be a transition when there's more inclusion of people, not just bring advisors from overseas, bring people who've been successful. Don't always see this as a threat because it's like Nvidia or Tesla coming here. Everyone sees them coming here. It's crazy. If they open here, it will be a huge fillip to the economy. But it seems that some people still see this as a risk. Vietnam and Malaysia now have so much foreign investment because they make it easier. And I think Indonesia is still demanding that if these guys want to come here, they have to do partnership with oligarchs, etc. Tesla's bigger than economy's bigger than the Indonesian economy. They're not going to do this. So, but think of the upskilling and how many different people from different backgrounds would then be able to lift themselves up. And then, rather than this ex-Gojek, ex-Grab, we'd have the next generation of startup people would be ex-Nvidia, ex-Tesla. Then you've got a real economy like they have in Silicon Valley. But here it's everyone's like ex this loss-making company, ex that loss-making company. It's not. They all think it's cool, but for me, it doesn't stand up. So they need to have more people included, and the startup and VC economy has to become part of the wider economy, not just some little group of people who have events and, to be honest, just loving events. That's all they do. That's all I see. I don't see any practicality. I don't see very much admittance of the problems. I just see, and some of the excuses like, this is the classic. I was at an event not so long ago, and I heard somebody go, don't worry about this. We are an early economy. We are an early startup economy. Let's all move forward to MS 2045. And everyone cheers. Like, basically, you can say anything here positive and you'll get a cheer. So, and it doesn't matter who you are. You won't, if you get a job, despite the fact you don't deserve it, no one will comment. There needs to be more openness, more critical analysis, and I think then they can get the trust back, and then new investors can come in the market, but there needs to be a different approach than previously.
Well, gentlemen, it's been a very interesting 1.5 hours. Can you believe it's been 1.5 hours of us sitting down and really talking?
I can. I'm very comfortable.
I feel like I'm back in business school.
Wait, you went to business school?
I studied finance. Believe it or not, this is how I use my finance studies because I do believe no knowledge goes to waste. And I do think, and I appreciate you saying the fact that there needs to be more openness. Perhaps the next generation of young Indonesians will have that openness, to be able to not be afraid to brain pick the way I just brain picked both of you. No, I just hope I'll find some kind of medium or proper let out for people to actually learn something. But I do hope that since you're in Indonesia, actually take the time to, meet with people, not just forcing them to listen to you, but educate the younger generation. Why not? And they say knowledge is so exclusive. So they want to be open.
We'll get him on video for Indonesia, and
you need to move then to Indonesia.
I'm gonna film him.
So it's quite funny. We get a lot of calls. Just like, can you have coffee? Can you have coffee? And I'm like, me, I really cannot have coffee with everyone, to be honest. It's very difficult. So Miranda here designed, we had a morning with Martyn event where we invited entrepreneurs who are not part of the normal system. And it was very good, lad.
Was it like this?
We're doing
speed dating?
No, not really. It was just a chat, wasn't it?
Speed date with Martyn Terpilowski.
No.
It would be so amazing.
We're doing a night with Martyn in 2 weeks' time. And that's another where we invite, we just people who want to catch up, and the people who are not in the normal world. There's a lot of them people out there. We met many interesting people who had their own startup company. Like no one's ever heard of them because they're not part of the VC world, and they have like 50 employees and making profit. I never heard of them. It's like, wow, this is really existing, So yeah, you just don't see them. You only see the people who make the noise, and the people who make the noise are usually the people who are covering up for something, i.e., mass losses. And that's the thing why David's the first guy who ever wanted to engage in something. And I don't want to watch me on TV.
Do you want to read out some comments,
right.
Perhaps?
No. Enough now. Enough.
Yeah, go ahead.
What about not having an actual table for a podcast? Would that be a red flag?
Do first, learn later, right? Do first, learn later. Okay, you need a bigger couch.
Yeah, sorry.
That's fine.
Put that on the shopping list.
He's commenting a lot.
Who? Only McCann. He's a good lad. Good lad. Yeah. I know him. Yeah.
Well, gentlemen, it's been super nice, and super nice also 1.5 hours brain picking about the reality of what's like. There is always this exclusivity in this country that comes with being involved as a VC, and you've also mentioned that there are some startups that are not involved and they're doing pretty well. So I think we would like to see how this is going to play out in the future as well, especially here in the region, in Indonesia, because I think a lot of interesting things are going to happen in the next couple of years. So I want to say thank you, Martyn, for having me, and thank you for doing this. The VC Strike Back finally. Is there going to be another session? Because I think
yeah, I would really, really like to use this opportunity to please just. You see me and him today. We're not having a fight. Why can't Indonesian venture capitalists get up and give me the arguments of why I'm wrong? Because maybe I am wrong. But the problem I've got is no one will tell me I'm wrong. People will just avoid or block. It's kind of I don't think it's a good thing at all. We should be exchanging views, maybe to improve the whole economy.
Mm, agreed. So it was made to be VS, but it turns out you guys actually have a lot of common ground. And there's.
Wait, let me move to Indonesia and then defend the Indonesian VCs and tell him why he's wrong.
Well, then you have to meet the Indonesian VCs first, right? Well, there you go. So thank you guys for watching on the LinkedIn Live, and hopefully there's going to be a next session. You said TikTok was TikTok Live is next, but you can just wait for the information. I'm pretty sure it's going to be posted on Martyn Terpilowski's LinkedIn, at least. Yep.
Let's picture it. Let's get out of here. Two homeless Finished? Okay.
Yay!
I don't know video anymore. I've got a new video when I tried to start.